All right, everybody, it's Friday. Yeah, September 9th. Looking forward to the weekend. Actually, the weather here is getting, I'm a summertime guy, but I mean, right now I have to say the weather's pretty nice. It's warm, it's dry, it's kind of like that fall. I'm not into the fall. I know everybody loves the fall. I like summer, but as long as it's hot, it's not that humid. Today was a beautiful day. I'll tell you, last week when I went on that hike to Colorado, that kicked the you-know-what out of me, and I'm surprised. I have to be honest, I'm surprised because last November, and I think I told you guys this, I climbed that Mount Bierstadt in Colorado. That's 14,000. That's one of the 14ers, as they're called. There's like, I think there might be over 40, maybe more, maybe 60, something like between 40 or 60 peaks in Colorado over 14,000 feet. I don't know if I'll do all of them, but that's like a goal now. I want to do these 14ers. Anyway, I did that with my son last November, and I don't know, I was fine after that. I was fine. But this one, which was like 12,300 something, I mean, the next day I was just, my legs were burnt. They were fried. I couldn't move. Took me like this whole week to basically recover. So it was weird. I don't know. Anyway, let's talk about the market. We had it was a nice day, another nice day. We finally got a positive weekly close. Everything's been so emotional since the Jackson Hole speech. And I've been talking a lot about that. And that is all this monetarist insanity, I call it. It's an extreme psychosis. It borders, or it is delusional at this point. That's all you hear people talking about. That's all people focuses on. That's not me, okay? As I've said many times, first of all, really monetary policy is irrelevant other than just understanding that the setting of interest rates is price setting, and it's also a fiscal operation. When rates rise, we see net transfers to the economy from the government increase via the interest channel. More interest is paid, and I gave an example of that yesterday. We saw bank profits jump sharply from interest being paid. And remember, this is just getting started, just in its nascent stages, and this is going to persist for a long time because as these government securities mature, and remember, there's 24 trillion of government securities held by the public globally, with all different maturity dates. As they mature and new ones are issued, they're going to be issued with the new higher interest rate coupon, and you're going to have an elevated, like the plateau is going to be raised for a long period of time. That's just a big, you talk about the swimming pool. I mean, that's like, the spigot, the water flow coming into the swimming pool is just going to be cranked up like crazy. But don't expect, any of these monetarists to understand that. Don't even expect anyone on the Fed to understand that. I mean, their rhetoric, if you listen to their rhetoric, it's like, yeah, we're going to raise interest rates to squash inflation, when basically what you're doing is a fiscal expansion and you're raising the price level. So anyway, look, I'm happy with the last 3 days of a rally, but I will say that we're not completely out of the woods yet. I mean, next week on Thursday is that quarterly corporate tax payment that I've been, telling you guys about since like July, August. I mean, I see these things, and it's not like I'm clairvoyant or something. I mean, these are all on the calendar. We know when taxes are due. We know when Social Security payments are going to be made. Okay, all this stuff. We know that on the first of the month, the government's going to have big withdrawals for Medicare, Medicaid, military pay, veterans benefits, disability. I mean, we know all this stuff. It's not like I'm looking at some crystal ball and like, See, it's what I said. I don't have to guess. Like everybody else is out there guessing. They're going to look at a number from 30 days ago. What was industrial production in August or something like that? Or, the jobs. Let me guess what it's going to be. That's the second derivative. I did a whole video on this about some commenter criticized me saying like I only look at one thing. Yeah, I look at the first derivative. I look at the primary cause because from that I can ascertain or I could, deduce what's going to be with the second derivative, like employment and industrial production and all that stuff, GDP growth and stuff like that. I'm the only one telling you guys this, and you know this, all right? So anyway, next week we're going to have that corporate tax payment. And again, I'm sorry if I repeat, but I mean, I'm a believer that that's how you learn. I mean, repetition is how we learn. Not just academic things like this, but I mean, if anything. If you want to practice any sport, right? I mean, you got to repeat over and over and over again. If you want to play golf, you got to go out there and you got to play. And you got to practice your swing, right? If you want to play basketball, you got to practice shooting or whatever. If you want to learn how to throw a football correctly. Speaking of which, we just started football season. So next week, and that's not inconsequential. I've been telling you guys about this, but I also said that, and I'm speculating on this, but I said that some of the big selling in the second half of August, after it was triggered off from that Powell speech, I'm going to inflict pain, the Jackson Hole speech, I said that some of that selling may have been tied to or may have been people front running. And by front running, I mean, they're selling to maybe get liquid, raise some cash for that corporate tax payment. We sometimes see right before these quarterly payments, some market weakness because, people need to raise cash. Hang on. Yesterday it was worse here. If you think this noise was bad, they were drilling up the streets. Oh my God, jackhammer all day. I was going crazy. I was even wearing a headset and listening to music and it was like ridiculous. Anyway, so it's not unusual to see some selling ahead of these quarterly tax payments, as cash is raised. But there was a lot of selling. Look, that speech, and I even said, like, I was surprised at the extent and the magnitude and the hysteria. I mean, really, it was, like I said, it's delusional at this point. But we'll see next week if I'm right. I mean, normally mid-September through mid-October, those are seasonally weak periods for the stock market. And now you know why. It's because of that tax drain. Then we have to worry about maybe a government shutdown. The Congress has to do either a new continuing resolution to avoid a shutdown by September 30th. So we got, this period, I wouldn't say it's fraught with risk, but I'm saying it's seasonally could be a little bit shaky. But getting back to what I said, the selling in the second half of August leading up to basically the end of last week, that might have incorporated a lot of this stuff. All right, you're still going to get tax selling near the end of the year, but I'm not even ready to talk about that yet. I mean, it's not time to talk about that yet. The good news, as I said, and the reason why I'm really not worried about this, me personally. I mean, you might think, oh well, if you're really short-term oriented and you like to trade it, you might think, and I trade using futures, but I mean, my stock portfolio is basically about, I build it up every time there's a pullback. I add to it to whatever extent I can. Obviously, I don't have unlimited funds. I'm not Jeff Bezos, I'm not Elon Musk, and even those guys, they don't have unlimited funds, but that's my strategy with my own personal stock portfolio. I like the downs. I mean, because it affords me an opportunity to get into stocks, cheap, like buying them on sale. But if you are short-term oriented, and if you trade it, and maybe you trade S&Ps or whatever, or maybe you trade options, or maybe you play around with some of these ETFs, and you want to take a shot going short late next week or just before that, the 15th. I mean, that still might happen. I just think, again, that some, if not a lot, of that selling was already done in late August, because let's face it, the emotional environment. I mean, when Powell came out with that speech, and remember, we came into that Jackson Hole speech and people were thinking, oh, maybe he's gonna talk a little bit less hawkish. Maybe he's gonna talk about the Fed, kind of decelerating now. Put a program of slowing down these rate hikes. But no, he came out and he said, we're gonna have to go through pain. So the emotional environment following that was really, really negative. And I know the monetarists, they were just cheering. I mean, it was like, yeah, it's going down, it's going to crash. We got this guy again from Morgan Stanley, this Mike Wilson, who's like a super perma bear. He's like, we got another 15 to 25% down, which I don't think, personally, I do not think. I mean, I like what I see in terms of the fiscal flows. And I was about to say, like, me personally, I'm not worried about that corporate tax payment, because what happens? I mean, we saw this in April and we saw this in May and June. We saw this in April and we saw it in June, right? April was the big personal tax filing, and then June we had the quarterly corporate tax payment. And I said, yeah, the government drains it out. But then what happens? They through the course of regular spending, it gets spent right back in again, and then some. Because remember, the government runs a deficit, so it's always spending more than it's taking away. That's the definition of a deficit. So I don't worry about these things. I mean, I just know that maybe I'm going to have to go through a period of a month or a month and a half. Usually it's like 3 weeks. All right, these quarterly payments can be like a 3-week drain. So you might, if you want to play it, I mean, you might want to go Thursday short and then hold that for a 3-week period. But again, if I'm right, and the selling, a lot of that selling was already dissipated out in late August, then we might not see that big of a pullback. And coming into this thing, I think I said it yesterday, so far this month we have a 92 billion deficit. So far this month, an additional 92 billion net has been added. 227 billion was added last month. So, we're up to like 320 billion between last month and the first, 8 days of this month, 320 billion. So they're going to suck out now on Thursday another 110 to 120 billion, and then over a 3-week period, maybe a month, we'll recover that again. So that's why I'm not worried. I mean, if there's going to be a dip, I'll buy into that. And I'm totally not worried with the interest rate situation. I think I said yesterday, you look at Turkey, they got a 13% interest rate. Their economy is growing at 8%. I mean, we'd be lucky to have that. And I said, interest rates are an arbitrary factor. It's a redistribution of income. But it's, the bottom line is it's all about the growth in the economy. If the economy grows, the pie gets bigger, and then we all get a little bit more of that bigger pie. And that's what's important. And there's no one who can say, you cannot say that rising interest rates shrink the economy, because all it is, it's a fiscal expansion and it's a redistribution of income. That's it. The only time you could shrink the economy is if some spending cohort, net spender like the government, if they cut back, if they ran a surplus, or if the trade deficit was so big that it was subtracting from GDP. And there's 4 components to GDP. It's not just about the trade deficit. The trade deficit, by the way, is a perennial subtraction to GDP, but not enough to to create a constant, shrinkage in the economy. So I don't worry. I just don't worry about these things. I really don't. I'm not saying, listen, all right, I'll be honest with you. I'm not saying these down times are fun. They're not. Obviously, nobody likes them. But I don't panic over them. I get bummed out when they're down 3 weeks in a row, even though I'm usually, I put my orders in below the market, and it's like the whole thing is automated. For me, it's like going fishing. It's like you bait some hooks, you cast them out there, a bunch of lines, and then you just sit back and you wait, all right? So like I have my orders and the stocks I like and the companies I like underneath the market, and when the markets come down, I get notified, on my Schwab account, okay, you bought this, you bought this, you bought this. I'm like, great, because I've been waiting for that. It's like you wait for the sale and then you go and you get it. So I want to talk a little bit about the dollar. I ended off yesterday with a comment about how I thought the dollar may be entering into a correction now, because we have seen 3 weeks in a row of declining U.S. petroleum exports. The U.S. is a net exporter, big time now. But Biden, a couple of weeks ago, he was like begging the producers and refiners here in the U.S. to slow down on the exports so we'll have enough supply for the winter. And we have seen 3 weeks a net decline of 2 million barrels a day of crude and petroleum and refined product. And I think that might be enough right now. We're at the lowest level of exports in 4 weeks. I mean, that might be enough to pull some support away from this dollar rally. And we saw the dollar come down today. I'm a little bit short the dollar now again for the first time in a while. And we'll see what happens. I mean, like I said yesterday, we might get the numbers next week and the refiners are just right back out there, exporting, like crazy. So I don't know. But right now it kind of looks like they're doing what Biden wants. And if that's the case, I think it's going to take some support, a decent amount of support from the dollar. So yeah, that's going to benefit like gold. A lot of people look at the dollar-gold relationship. I don't know if there's a really that big of a correlation there, but I know people look at that. To me, gold is another economic indicator. I think if we get an increase in economic activity, you're going to see gold prices go up, In a large sense, it's an industrial metal. Copper was up today. Oil was back up today. I sent out an email to my subscribers actually 2 days ago, I think, saying, when we were down, WTI was down around 82. I said, it looks like now we can get back in. And oh yeah, one other thing I want to mention. I took a quick glance just earlier at the Fed's weekly banking release, and again we see the same trends. Like banks are dumping their securities holdings, like treasuries, agencies, and MBS, and they're adding loans. Another week of loan growth, and this is we haven't even seen any QT yet. Nothing. I think the Fed balance sheet, I just saw it yesterday, I think it was down like $2 billion. No change in treasuries, no change in MBS. I mean, I don't know what they're doing. They say they've been saying they're gonna do QT, and everybody's freaking out about it, but they haven't done it. I want them to do QT. I'm waiting for them to do QT, as you know. I said this all the way back in March, like I cannot wait until they start doing it. So all these monetarist zombies who are freaking out over QT, they're really gonna, their heads are gonna blow off. Their heads are gonna explode. Because it's going to be bullish as hell. But I don't see it. But nevertheless, loan growth, my friends. Loan growth. All right, that's it for today. I hope you have a great weekend. Maybe I'll try to do a video over the weekend. But if not, have a good one. I'll see you on Monday. Bye.